We've just traded above 100 on the Shanghai Gold Exchange, and we traded up to 91 on the Western spot market overnight.
Yeah, so right now I'm looking at I have it on my X account. You can share with your audience. The PM benchmark price for the SGE for silver is at, and I show the calculations as well because they quoted in RMB yen per kilogram. So I converted the price to US dollars per troy ounce. So it's the equivalent of 101.5587 US dollars per troy ounce. So I mean, this is historical because this is like three-digit silver. It's above $100 in Shanghai, China, at the SGE, which is by the way, that's the physical silver price. China's been loading up on commodity imports. So I think something is about to happen, Mario. I mean, even like you said, Mr. Hansen, he's not exactly bullish silver. He's posting this, and I think this is a signpost to what is to come. Like China and the rest of the world, the global power players, they're all hoarding physical things that they cannot print. And gold and silver.
Physical silver has broken $100 in Shanghai, while Western prices lag by nearly $10, exposing decades of paper silver suppression. Arbitrage has failed, LBMA lease rates are falling despite shortages, and COMEX open interest is dropping as shorts cover. Banks are restricting junior miners as physical scarcity, industrial demand, and central bank buying drive a historic silver short squeeze. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
And it seems like every day we have new highs in both metals. Today, the high in gold was so far 46.40, the all-time high. And spot silver, not the Shanghai price, of course, traded up to 91.60 overnight. So it's about $10 less than the Chinese price. So do you want to talk a little bit about what you think is going on with silver especially?
Yeah, so normally, like when there's a big arbitrage, by the way, like the Shanghai Gold Exchange and the Shanghai Futures Exchange, their quoted silver price don't include VAT, okay? The Shanghai Metals Exchange, which is a separate entity, they do OTC, over-the-counter bilateral trades, they, like their quoted price, include VAT. So, but like we're talking about SGE, Shanghai Gold Exchange, and Shanghai Futures Exchange, right? Which in fact, with the Shanghai Gold Exchange, PM benchmark price, today is at 101, like we said, 101.5 US dollars per troy ounce equivalent. So anyway, that's like you said, Mario, is like almost $10 above the Western price, right? Like the LBMA price or the COMEX futures price for the nearest front month. And why is that? Well, normally, like you would expect this gap to close, and they do in the past. Like, I mean, there's an arbitrage, and then when the LBMA ships stuff to China, you see the price differential narrows. But this time, we're not seeing that. Interesting.
Silver supply in Shanghai, it looks pretty. It looks like it's shrinking very fast. Sent me this chart here, and it shows that, Shanghai silver stocks are dropping quite fast.
Yeah, so actually, like, this, yes, it's dropping again. It's down to, I think it went back up to around 1,500 metric tons. Now it's back down to 1,200. So like, yeah, you're right, Mario. Since January 1st, that like this thing is just dropping.
Breaking UBS ultimatum on silver shorts. So it's basically saying an internal UBS report classified as urgent reveals an existential crisis at Switzerland's largest bank. jeopardizing not only UBS itself, but the entire Swiss financial center and stability of the Swiss franc. Says UBS currently holds a silver short position of approximately 5.2 billion troy ounces. So
the king and queen, so to speak, of these physical things that governments cannot print. So, in my opinion, just look back to what you said in the beginning of the show. I think it is completely natural that silver is just about to break $100 per troy ounce. So what happened last night is, I got a lot of friends on X, right? And I get like really good recommendations for junior miners from yourself too, Mario, right? We trade, information and names, etc. So this one person gave me a whole bunch of names that I looked at, and they are very good junior miners that are restarting old silver mines. So I like that because like those are not pure explorers. The mine is right there. They just need to get the paperwork done, restart, and they got money coming in.
yeah,
So I tried to
I
buy
mean
it.
that's what Chancery Royalty is doing,
Awesome. Awesome.
restarting old mines that were not really doing that well 2, 3 years ago. Yeah.
Okay, so that's a great business model. I was ecstatic. I want to get into it. I called my broker. I pick up the phone because, again, some people ask, Eric, why do you use a broker? Well, New York trading hours is my nighttime. It's midnight. It's after midnight when it's active. So I don't like to be awake all night doing this. So I tend to use a broker. I give them instructions and they get it done. Okay? So I use a Hong Kong broker. So I called him, I placed the order, and then 10 minutes after he came back to me and said, hey, Eric, sorry, we can't do it because, our clearing firm, which is Citigroup, okay, apparently Citigroup does clearing for all these US equities for a lot of Hong Kong brokerages, okay? So apparently around 70% of Hong Kong brokerages use Citigroup to clear these transactions. So anyway, long story short, Citigroup told them they can't do it. They just it's sell only, liquidation only for small equities, small names that are $300 million US or below market capitalization, or if they are $5 or below, okay, in terms of share price. And also another thing that I noticed is, Bruce Ikasu from Japan. He's a member of the Japanese Bullion Market Association. He shared that the LBMA implied lease rate for their 1 month silver lease rate is now at around 3.5%. So it dropped from, I think it was 2 weeks ago, it was at around 8.8, 8.5, and now it's at 3.5. So that's interesting because given the tightness of the global physical silver markets, you would think that the LBMA lease rate would spike from the 8% to I don't know, 10, 15, 50, right? Like what it did in October, but it dropped, right? So my hypothesis is that either the LBMA, I think Vince Lancy talked about it yesterday. So it's either the LBMA do not have the physical silver at all. So they're telling everybody, hey, just don't lease. So we create this,
artificial rate.
Artificial rate,
I mean,
3.5%.
They lied. The bankers lied during the Great Financial Crisis about the LIBOR rate, so they can lie about the silver lease rate.
So either they are creating this artificially, or I think my hypothesis is that minimal amounts of physical silver, is flowing from the LBMA to China or from China to the LBMA. We mentioned this. China implemented physical silver export control starting January 1st, 2026. So now it's on a case-by-case review basis. Every time somebody wants to ship silver, export it off China. So if there's any hiccups there, like we don't know because those are bilateral trades, right? If that is stopping, I don't see why the LBMA or the Western players would ship physical silver to China, other than the whatever silver leases that they took on from China, and they got to return the physical silver to China.
Yeah, Eric, I don't know if you saw yesterday, there was, I think it was the 12th, there was a press release from the US Treasury that saying that Scott Bessent, he convened a meeting with all the major finance ministers of US allies like EU, South Korea, and others to talk about the strategic minerals, how they had to secure the supply chain. And some people are speculating, yes, they're trying to make sure that they get silver. And I think that's the problem. The silver is not flowing anymore. I've also been hearing that sovereign wealth funds and central banks are involved in silver now. And also, we know India, they're big into silver. So it's not just the industrial guys trying to get real physical. It's the central banks. And I think a lot of these central banks, they are aware of this supply chain disruption, the dangers, the probability that we could have a major conflagration, and the paper, like you said, won't do. They want the real thing. So it seems to me that it's almost a run on silver, a run on the bank. Some open interest data from COMEX, I think it's for silver, and what is interesting, and I worked in the futures market for many years as a broker. What is interesting is when, let's say, the market is going up or going down, there's a big trend. Open interest usually goes up. And with this big move in silver here, open interest is going down, which is very unusual. What it tells me, and I don't know if you agree with me, is that the shorts are covering and closing their positions. So, and the thing is, this shows that there's still a lot of room for speculative people or investors to go long. Is that the way you see it too, Eric?
I completely agree, Mario. And people always say to me, Eric, the silver price went up, so it evens out. But if the open interest is staying low or drop lower, etc., right? But like physical silver buyers, they look at it in troy ounces, in metric tons, right? Like you can't just shove a piece of paper in your solar panel or your electric vehicle. It's actual physical weight of the silver. So in my opinion, I think it does matter a lot that the open interest is not spiking higher.
Eric, could you tell the viewers what you're doing in terms of your precious metals, like bullion positions and miners?
Okay, so I'm holding all my physical gold and silver. I haven't sold a single ounce. I'm holding all my miner. I'm trying to buy more of the lagging juniors, but they won't let me. So I was busy trying to find a new broker before I got on the interview with you. That's why I did the whole day and talking to my existing broker. And also, by the way, one of my brokers was laid off today. Like half his department was laid off. So it's chaotic here,
I see.
right? I'm trying to sort out all this chaos, right?
Yeah.
And then I'm trying to find a new broker.